Hello and welcome to the Lion Cage podcast. I'm Sibs and this is my co-host Riaan. And today we had the pleasure of sitting down with an angel investor by the name of Raj Kulasingam. Raj is a Malaysian national who spent a number of years in the UK and is a partner at one of the biggest multinational, if not the biggest multinational law firm in the world called Dentons.
He boasts a portfolio of more than 30 companies that he's invested in, 4 VC funds and a startup accelerator. We spoke about the needs that startups need from an angel investor and what they as angel investors can add value to their startups that they invest in. We spoke about the convergence of VCs and equity funds and so much more. I think this was one of our best episodes yet.
Yeah, and please don't forget to like and subscribe below, and you can find all of our links below as well, and you can also find the links to all of Raj also in the bio below. And I hope you enjoyed today's podcast. See you soon. Raj, welcome to the Lion Cage. Thank you so much for making time to be here. And I usually get the start of the podcast from a guy by the name of Stephen Bartlett. He usually asks his guests in Diary of a CEO, what is it about you that makes you you? So it usually stems back to your childhood. So I want to understand, what was your upbringing? And what did your parents do? What are the sort of the key factors that sort of made you into the person that you are today?
I feel like I'm the psychiatrist. Okay, let me tell you a little bit about myself. So I was born in Malaysia. Actually born in a very small palm oil rubber estate, about 100 kilometers north of Malaysia. It's this little dusty place which hasn't really changed in the last 50 years, called Slim River. And my father was a foreman on the estate. He basically woke up at 5 o'clock in the morning, went around with all the other people tapping rubber, cutting the palm oil down, and made sure that everything was sent to the factory, they processed it, etc. My mum was a housewife. Two sisters, one brother. When I was about 3, my father decided that he couldn't afford. Let me put it the other way. He said I would have a better life if I lived with his brother, who was a teacher and a civil servant in the city. So he shipped me off, and I grew up with my uncle and my aunt in Kuala Lumpur, which is the capital of Malaysia. And so I had this slightly odd upbringing where I thought I had 2 sets of parents. I had my father and mother in the estate, and then I had my father and mother in the city. So we sort of had this sort of dual existence. Something odd happened when I was about 8, which I think has kind of shaped my life, which is kind of difficult to talk about sometimes. But my grandmother died, and my father and my foster father fell out, and I was told that I couldn't see my siblings. So for 10 years, I never saw my 2 brothers, my 2 sisters, my brother, and my real parents, until I was a young adult where I could choose things myself. So I lost 10 years of my life with my siblings, my real siblings. I had a foster brother that I grew up with my aunt and uncle, and we had a very good relationship. And then we all came together when I was old enough that I was my own person. But I kind of felt I lost 10 years of my life where I wasn't allowed to see my siblings. But my foster parents had more economical means, so they were able to educate me in a way that perhaps my father couldn't. And they asked me what I wanted to do. And, if you're an Asian parent or Asian family, you kind of, I'm sure you know this, there are you're given 4 choices, basically: doctor, lawyer, engineer, or accountant, right? I mean, that was it. So I couldn't count, okay? Didn't like blood. Engineering also was out. And so I was left with law. And I was always good at talking and, engaging with people. So I said, let me go and do law. And at the time, the key place you would go and do law was the UK. So I went to the UK. I studied to be a lawyer. I qualified I did my LLB honors, law degree, and then I had to go and do a professional course, which is you can choose to either be a barrister or a solicitor in the UK. I don't know whether you know. The barristers wear a wig, wear a gown. I was going to go back to Malaysia, and in Malaysia, you always do the barrister route. So went and did my barrister thing. And one of the things you have to do is really interesting, is that to qualify as a barrister, you have to do the exams. You have to also go to, you're affiliated different Inns of Courts, and you have to wear a gown, and you do 24 dinners. It's literally, you go and eat dinner in this huge hall with all your peers, and the judges and senior lawyers at the top. And the idea was that you engage with them, you learn through, socializing. And it was, there was a very social aspect of that space which I really loved. And I qualified as a barrister, and then I realized that actually, do you know what, I didn't want to go to court. So, and I was very commercial, right? And so I thought, what can I do with this degree that I have? And at the time, I'd also met my now wife. I decided I wasn't going to go back to Malaysia. I was going to study in the UK, work in the UK. So I applied for a few jobs to be a corporate lawyer. And that's kind of how I started my career as a young corporate lawyer in the City of London. In 1991, we were at the tail end of the roaring 80s, or whatever it's called, where it was champagne every Friday night in the bars. Everyone was making lots of money. So that's kind of how I was introduced to the world of working.
Was it a relatively easy adjustment moving to the UK?
For me, it was very easy. I loved it. I arrived, the only thing that I remember arriving and thinking, wow, this is so alien, but so exciting, because it's so different to where I'd grown up from, right? And everything was, you had to learn everything from scratch. But I spoke English, so it wasn't like, I was going to a new country where I had to learn another language. And Malaysia was a colonial, was an ex-colony of the UK. So we knew about Britain, we understood a lot of stuff. We read, English books and history books and all the rest of it. So it wasn't a huge acclimatization to flip into living in the UK, right? But the thing I loved most about coming to the UK and going to university was the diversity. So I went to university, Warwick University, and there were people from all over the world, black, white, yellow, green, whatever, right? And the one thing I remember, and it's relevant to where we are today, was Warwick was the hotbed of anti-apartheid, the anti-apartheid movement in universities in the UK. So we had 4 banks on the campus, Lloyds, Midlands, Barclays, and HSBC. Barclays, if you remember, was one of the only banks, UK banks, was in South Africa at the time. And there's huge anti-apartheid protests against Barclays being in South Africa. And there was always a protest outside Barclays Bank. The cash machine was always glued up, right? So I don't know why anyone even went to use Barclays, because the cash machine never worked, because they just glued it up all the time. So yeah, it was exciting and fun, sort of being in a new country and meeting new people and experiencing new things.
And your progression as a lawyer, was that, how did that progression work? I want to just delve deeper through the progression of lawyer to where you are now.
Yeah, so I started off doing, a bunch of different things: litigation, shipping, and then corporate M&A. And I did that for about 5 years, corporate M&A for about 5 years. And I very quickly found that I was really not that excited about that piece. So I was thinking, what's interesting? And I remember I seeing an advert saying, oil and gas lawyer required, no experience required. I said, well, that sounds like something I could go for. So I applied for the job, and surprise, surprise, they actually gave it to me. But what happened was, at the time, there was this whole program of infrastructure building in the UK. So there was something called the public-private partnerships, which UK first invented in the 90s. And I got thrown into these huge multi-billion-dollar infrastructure programs as a lawyer, and I learned how to structure deals, how to negotiate contracts on these huge contracts and huge teams. And it was great experience, because it taught me, I really cut my teeth in terms of the skills of learning to be a lawyer and learning to understand the commercial aspects of law, and learn to draft, which is a very, very key skill as a lawyer. It's about actually those words making sure those words actually capture all the things that you wanted to capture. And that went well, but I think being a lawyer, I felt that there was something else in me, and we'll come back to that a little bit, which is the thing that excited me most about being a lawyer was the commercial aspects of it, not the drafting. I mean, it's like the drafting I found after a while was like just painful, right? I could do it, I was reasonably good at it, but it really didn't make me sort of
want to wake up in the morning.
I resonate with that so much. I studied law as well.
Right. And the thing I also really liked was the relationship part of things, meeting people, and engaging with them and talking and building those relationships and understanding what is it that really makes them tick, right? Because one of the challenges of being a lawyer is that it's not just about writing down stuff. It's actually writing down what's important, because you could have 20 things that you want, but only 3 things are important. And the other 17 things are kind of not really that important, and you could probably live without it. But you need to focus on those 3 things because that's what the deal is about, okay? And clients often don't realize this, and lawyers also don't realize. So we spend a lot of time, some lawyers do, good lawyers don't. A good lawyer will actually say, well, I'm only going to focus on those 3 things. Tell the client there's 17 other things there, but do you really want to worry about it? And when they figure it out, they say, no, I don't really want to worry about that. I can live with that. But I do want these 3 things fixed, right? So that process of sort of understanding the mindset of someone who's commercial, understanding the deal, that was what really made me tick.
What, when you were starting out as an attorney, was the commercial side of it what sort of sparked the interest in investing? Was there an earlier memory of that arising?
So I can tell you exactly how I first started investing. I was a young lawyer living in an apartment block not far from Canary Wharf when Canary Wharf was just being built. And I was living in a 1-bedroom flat. I can tell you, we paid £620 for a month in a 1-bedroom flat near Canary Wharf when Canary Wharf's not being built.
Yeah, that would be a great price right now, Canary Wharf.
And the lift, we were on the 5th floor or 4th floor, and the lift went from ground to the 4th floor, and then there was an apartment block, a penthouse apartment block above, which went straight into the apartment block. And I thought, wow, I wonder who lives there, right? And one day I got in the lift, and this blonde guy gets in with me, and we get chatting, and he keeps going up. So I said, oh, do you live upstairs? I said, hey. He said, well, come and have breakfast with me. So that we can get in the lift and go upstairs, and I walk into this room, and I have never seen anything like it in my life. This was 1991. He had 20 computers in his room, right? Things buzzing everywhere. And I said, what do you do? He said, I'm an entrepreneur. I said, okay, tell me more. So he told me about what he did. In fact, he'd bought and sold 5 companies. He sort of built and sold 5 companies. And he was building this analytics company. And I was fascinated by his journey, right? He's obviously a very clever guy. And we're actually still friends, and we're actually investors in something right now, which I can tell you a little bit more. His name is Christopher Solheim. Incredibly clever guy. And I was fascinated by how he was creating stuff from effectively nothing, right? And the fact there were 20 computers when nobody had computers. There were no laptops. Even at work, you told your secretary to, you dictated stuff. You guys are probably too young to remember that. You dictated stuff into a dictaphone. You took the cassette out, you give it to your secretary. She does it on a word processor, gives you a draft for you to amend in handwriting, and then that was it. That was the way we did stuff. Can you believe it?
That's before my time.
Can you believe that people did that? Yeah. That's how we did work. So that sparked my interest in entrepreneurship and the fact that someone could create something with just stuff, computers. And about a few months later, he said, look, we're doing a small round. Would you like to put some money in? I didn't have very much money at the time. I was just starting my career. But I thought, well, seems like a smart guy. I'm going to give him some money. And I gave him some money. I think it was maybe, at the time, it's a lot of money. It was like maybe £10,000. And 3 years later, he sold the company, and I think we did like a 5x, right? I thought, oh, this is great, I like this. So that's kind of how it all started. So I very quickly figured out, and during the process, again, he would come and ask me advice, and we'd talk about the business and how he's doing, and then through the sales process, he'd come and ask me for advice on how to deal with certain issues, and that kind of piqued my interest of this whole, entrepreneurial startup venture journey. That was in, the early 90s. 90s, early to late 90s.
And let's talk about this sort of an angel investor journey, because I think you have a partner that you invest with, Vishal.
Yeah.
And where does he come into the story?
So there's a bit of story there as well. So in 2002, and again, look, I'm Malaysian. What am I doing in Africa, right? Yeah. Okay, so I'll tell you the story.
That was actually one of my questions earlier when you were mentioning South Africa.
But it links into the Vishal story. So in 2002, again, I was doing these large infrastructure projects. And Dentons, the firm I work for and still work for, had always had a quite strong Africa practice, right? And I remember getting a call from one of the partners saying, look, there's this client in Zambia. He's doing a hydro project, and he needs some help, and he wants someone to go down to Lusaka this week to go get him to sign some documents, or to finalize some documents. And who's available? And no one put up their hand, literally. I mean, we had 20 partners. I was a partner of them. And I said, I'm free, I'll go. Never been to Africa, never been to Lusaka, never anything. So the client sends me this document, and I looked at it and I said, there's no way no one's signing anything like this, because it had so many holes in it. But anyway, I went to Lusaka, I got picked up, and while I sat down with them, I said, look, we need to fix all these issues in this document, right, before you can get financing. And then I said, where's your financial model? Yeah, we've got a financial model, don't worry about it. So I said, can I have a look at it? So he shows me the thing. It's basically an Excel spreadsheet. It hasn't got any of the things you'd expect to see. Even I, as a non-financial person, could very quickly realize that it was not fit for purpose. I said, have you got a finance person, an investment banker, or a financial advisor? He said, yeah, my accountant. No, you can get someone proper. So I make a phone call to a few people and said, look, I'm in Lusaka. I need someone to come here and sit down with this guy to build this financial model. Who's available? And then a friend of mine said, look, speak to this guy who's a partner at PwC called Vishal Agrawal, based in Nairobi. Here's his number. So call him up, and I said, hey, we've never met before. I've got this issue, this problem. Would you be willing to come down? So he got on a plane, came down. We sat down, structured thing. He started building a financial model, and that's how we sort of first started working together as a lawyer and an investment banker, stroke financial advisor. So that's kind of how we first met.
And what was it about him that sort of made him a good investment partner?
So to be honest, we didn't do any investment together for a long time. We first were professionals, then we were friends. He went from PwC to G and ran G's balance sheet on the continent. In 2010, I stepped down from the partnership, and we're going to talk a little bit about that. And one of the reasons I stepped down was I wanted to pursue this sort of non-law part of my career, right? This sort of investing piece. And I hadn't figured out how I wanted to do it, whether I wanted to go and join a PE firm or a venture capital wasn't even known then, right? I hadn't really worked out what I wanted to do. But I did know that I didn't want to be a transactional lawyer full time. So I sort of agreed with my then CEO that, look, I'd work part-time, I'd help them develop relationships and originate work for them across the globe, focusing on Africa, Middle East, and Southeast Asia. And I started investing more myself, just as an angel. And again, luck and timing. So in 2010, I live in a part of London called Greenwich. And there was a brewery called Meantime Brewery in Greenwich. And I used to go down, great beer. And a friend of mine said, hey, Meantime is raising some money. I said, for what? He said, well, they've got this huge new strategy. It's craft beer. Craft beer is becoming this big thing. So I started researching craft beer, and I realized that the US craft beer market is huge, and craft beer wasn't really known in the UK at the time, or indeed in a lot of parts of the world. So I asked to see the deck. I looked into some more, and the thing that, and this is one of the most crazy, well, not crazy things, the thing that I always tell, which is a good story, is that I said, well, who's leading the company? And I said, well, the original founder is a guy called Alistair Hook, and he's like a master brewer. He makes great beer. I said, no, that's not what I asked you. I said, who's going to lead this company? We've got this projection to do it, to change the business model, etc. He said, well, we just hired a new CEO, or about to hire a new CEO. And I said, I want to speak to him. So I remember I arranged to meet at the pub with a guy called Nick Miller. And Nick Miller was the head of SAB Miller in the UK. And we sat down and he talked me through his plans for the business. And I was really impressed with him. What I was most impressed was that he was taking a two-thirds cut in his salary to join a tiny little brewery in Greenwich. He had these plans to move the brewery, build a new production facility, change the business model from retail to wholesale, and build a brand. And a lot of things, as you know, is not just about selling a product, but it's actually building a brand and selling a brand. So I was super impressed with Nick. We invested a pretty large sum of money, my wife and I. And in 2010. In 2014, we sold Meantime Brewery to SAB Miller for, I think, $150 million, pounds. Right? So 4 years later. And this was a company that when we invested was, hard push to get $10 million for it. And it shows, and the thing that I always say was interesting, we hired a guy from SAB Miller who sold it back to SAB Miller. So he knew what he was going to do. So he knew the market. He knew what he needed to do to get the big brewers, because all the big brewers wanted to be in craft brewery, but they didn't have the expertise. They didn't know how to create a brand for craft brewery. Now today they all do. So that was a great story. I mean,
Am I correct in my timelines? That was your first investment, was the brewery?
No, it was. I had done other investments before. That was my first major exit, a large exit, right? I had done but again. That was like when I started doing it more professionally. I said, 2010 was when I stepped on partnership. It was when I first invested in Meantime, and that's when I started doing more of these from a more, I guess, part of a career, as opposed to sort of doing it one-off when you see something.
Yeah.
Was the beer company set up that way to have the exit? It sounds like it when you're bringing in a CEO.
Yeah.
Who had the connections with the bigger guys and had that connection to make the exit strategy simpler at the end.
So it was the line that we were all sold as investors was, this is a company which had a great product, not a great brand, and not a great business model. And we were getting a new CEO and a new team in to change all of that with a view to an exit, right? Because look, we all invest in stuff, and the most important thing is, well, how am I going to get my money out of these private companies, right? So we went in with a clear understanding that there was a timeline of exit. I mean, it was much quicker than we all thought. We thought it would be 5 to 7 years. It was 4 years. It was partly helped by that, and again, it's timing, right? The craft brewery market we were peak craft brewery. Right, 2014 was peak craft brewery, and we were just right place, right time.
How did your investment thesis develop over the years, and how did you develop it yourself?
So I think the investment thesis, first of all, you need capital. So that gave me capital, right? So whereas previously I was investing small bits and pieces out of, when I had spare cash, suddenly I had a pot of capital that I could say, okay, and I told my wife, we're going to pay off this and do this and do this, but I want this much to be able to go and invest. And again, I think there's still what's largely an element of kind of figuring it out what is it that made a good investment? So I think I was still finding my way around. And it kind of coincided with Vishal also resigning from GE and us talking about doing stuff together. And he said, look, well, let's put our heads together. And that's when we actually started developing a thesis, if you like. And the thesis was very, very simple. It was like, we want to be pre-seed to Series A. We want to be in tech and tech-enabled companies, fast-growing companies, and we want to try and get liquidity by Series B if possible, right? So that was kind of but we were sector agnostic, and very soon the second part of the thesis was that, well, where is our networks? So our networks were on the continent, in Africa, and in the UK. So if you look at our portfolio today, 60% of us in Africa, 30% in the UK, and 10% for the rest of the world. So we've developed that thesis over a period of time by saying, first of all, once you pass Series A, our money, which is relatively small, doesn't really make a dent. Yes? So you have very little sway over the entrepreneur. You have very little. I always say that, when an entrepreneur first asks you for money, and he's like saying, "Oh, I love you, I'll talk to you," and he takes your money, that's fine. And he still loves you and talks to you for the first 2-3 years, and always asks you questions, help, I need connections. Once you get institutional money, it's not that he doesn't love you, he loves other people more. Okay? And I always say that's cool, right? Because you need to know your place in the investment life cycle, right? So the early days, you can add value, your money means more, you can guide someone. Once institutional money is in, your work is kind of done, right? So then the question is, well, do you just stay on for the ride or get out? And we've always said, we want all our founders to be unicorns, but we don't want to wait for them to be unicorns, right? So we're always looking at how can we get liquidity, how can we get exits, because we're not a fund, and we'll talk about that a little bit more, and we need to recycle capital, right? So we need exits to be able to continue doing this, because after a while, okay, we still have income from other sources, but really what you want to do is recycle capital.
What do you base your thesis on when getting out in that company?
So there is no easy way of getting out in these private companies. The most you either wait for an IPO, which is 10 years if you can, and how many IPOs have we had in Africa? Very few. M&A, again, not that many. So you're really looking at secondaries. And you need to position yourself to be able to come out in secondaries. And a lot of time we'll say to a founder when we go in that understand our investment thesis, and comes back to my point about we'll give you love until Series A, Series B, and you won't want to love us after that anyway. So kind of our job is done, so get us off the cap table, right? So we have that very open conversation with all our founders, and they get it. And so it's like a sometimes written, sometimes unwritten pact that we have with our founders that they'll get us off, right? And now it's not always easy because the ability to get off, requires there to be demand for around, right? So if you're struggling to raise capital, there's not really going to be an opportunity for secondaries. So if there's oversubscription in a round, then there is. And then it becomes actually a win-win for everybody. Because from a founder perspective, you're not diluting as much. Because let's say a VC comes in and says, I want 10% of the company, but he can get 2% from secondaries. So the founder is only being diluted by 8% as opposed to 10%. So yeah, so if if a VC is coming in and says he wants to get 10% of the company, and you normally have to issue new shares for the 10%. But if you can go to your existing investors and say, look, who would like a secondary in this market? And let's say you can collect 2%. So you're only diluting by 8%. You only have to issue new shares, 8% of shares, new shares. So the founder gets diluted less. You clean up the cap table because some of the earlier investors out. They're delighted. They say you're a fantastic founder, you're a great company, so there's a lot of rah-rah around that. You get a lot of noise. And it's good for the ecosystem because the people, the early investors who get their money out can recycle capital. Again, to my point earlier, if you look at how the Africa tech venture landscape has evolved over the last 5-10 years, a lot of it has come because some of these early companies like Paystack and Flutterwave and Paga and all these guys have given liquidity to early investors who have then gone on to become VCs, who have then gone on to reinvest, who have then gone on to start a company themselves. And it's the same everywhere, right? So it's the same if you look at the PayPal mafia. So they made money, they took the money, they recycled. Right? So that becomes a virtual circle. So I think liquidity in these markets is really, really important. And that's why we always say, especially for the early angels, because you want to encourage more people. Look, if you look at 5 years ago, people saying, well, what is venture? What is it? We can't. And then you hear about, oh, wow, they made 20%, 20x returns, 100x return, and there's much more excitement. But you can't say it until you get exits.
You're an investor in one of my friends' businesses, Moments.
Yes.
He speaks very fondly of you as an angel investor. He says that you're very active and you take a lot of energy and effort into the businesses that you invest in. So in my book, that makes you a good angel investor. So what would you say are the qualities that you need to be a good angel investor? That's the first half of my question. And the second half of my question is, if I was someone who, and one day I do want to be an angel investor, is what percentage of my net worth should I be starting at to be an angel investor?
Okay.
Those are my two questions.
So I think to answer your first question on what it takes to be a good angel, I think you want to divide angels into professional angels, or I would say professional investors, and angels who are doing it just because it's kind of a fun thing to do. So I would definitely start off my life as saying I was started off as an angel, and now I'm a professional investor with Vishal. We see ourselves as professional investors. And what that means is that you actually are deliberate about how you manage your portfolio. You're deliberate about how you engage, how you provide value, and you think about how you can provide value. And the most value, and people can provide value in different ways, right? So if you are an operator investor, so you understand how business operate, you can provide advice on operations. If you're a lawyer or an investment banker, you have different skills that you can help with. Having said that, I always say to all my founders, I'm not your lawyer, right?
Free legal advice.
I'll help you, I'll guide you, I'll give you commercial advice, etc. But I'm not your lawyer. You need to go get a lawyer, right? I didn't get out of law to go back into law. But the most important thing that I think you can do as a professional investor, angel investor, is keep thinking of how is it you can be helpful. And often the most helpful way you can be is through your network, right? So I'll give you an example. So Aaron, I met him, we sat down, and he sort of talked me through he's very excited about this new tokenization of solar project that he's doing. And I said, great, I like the idea. I know a whole bunch of guys because I was an energy infrastructure lawyer who are in the solar business. Let me connect you to a few people, right? So I've introduced him to a few people. He's having a conversation with them. Now it's up to him to make the best of it, okay? And if he needs help, I'll come back to him. So I think the thing that you can probably do, be most helpful, is what you got to think, internalize that and think, what can I do with my skill set and my network to help someone? But I think you also need to do it the other way around. So as a founder, as an entrepreneur, you got to think, you got to understand your cap table, right? And say, I have this problem, or I need some advice, or I need someone in this space. Who can I tap up to give me that? And one of the things that I always tell founders to do is that, when you do your quarterly report, you say, okay, all the metrics, at the end, I need help with, okay? But that in itself doesn't help because everyone's busy, everyone reads, I need help with, you don't do anything about it. So you got to know who to ask that I need help with, yeah? And networks as well. I mean, sometimes you can ask me and say, okay, I need, and I'll think about someone. But actually you can be a bit more proactive on that, right? So if you say you need to connect with, I don't know, let's say you want to connect with someone at Standard Bank, right? Just sending an email to your network saying, oh, I need to speak to someone at Standard Bank, can you help me? No one's going to do anything about it. You say, the person I need to speak at Standard Bank is this person. Who, look at my LinkedIn profile, do I know that person? Raj, do you know that person? How well do you know him? Can you arrange a meeting with him? Now that becomes much more precise, and you've taken the effort of working out that I know that person. You've now asked me a direct question. I'll do that.
That's what you were talking about last week with the warm intros.
Doing warm intros, doing your research
yes.
on your investor and your cap table.
Yeah, you've been quoted a number of times in a few interviews saying that you're very bullish about Africa.
Sure.
And I'm wanting to understand that because it's weird. Although I love this continent,
yeah,
and I see a lot of opportunity in this continent, I've become very despondent over the years with some of the infrastructural issues that we face.
Red tape.
Yeah, red tape as well. And I'm wondering, where does this bullishness and this optimism towards Africa and its potential and why you continue to invest in Africa come from?
So I think you need to look at that at various levels, right? So I remember I was speaking to one of my clients and he says, I never do a deal where the government is involved. So as soon as you're doing these large, and unfortunately for a long time in my life, I was advising on these large infrastructure projects which need government support. And, you're at the mercy of the government. How fast or how slow the project goes depends on the government. Whether there's tax break depends on the government. So you're relying on a large behemoth that you have very little control over. Flip over to the other side. If you're a business, and of course you still have some interaction with the government in terms of taxes and duties, if you're a business that's driven by pure commerce, then it's really about some basic things, ability to pay, demography, is the product good, have you got the right product market fit, have you got traction, all the rest of it. And the thing that I think, the reason I'm bullish about Africa is that some of the solutions that are coming up to deal with some of the problems that you have on the continent, let's take payments as an example. They don't rely on government. They're just coming up with payment systems to get you faster payments, less friction, less costs, etc. And I think the reason I'm bullish is that I think there's a lot of entrepreneurial, smart, young people on the continent who can provide solutions to problems that Africa has today. And that's why I'm bullish, right? They're solving problems that you don't even know exist or don't even, and they should come and show you the problem. Wow, I didn't even know that was a problem. The energy crisis we have today on the continent, it's not a new one. We've always had power issues, right? Now, can you solve that through innovation, technology, new business models? Yes, I think you can. And I think that's the piece that's exciting. I'm not in any way detracting from the fact that you've got massive headwinds, macro, currency, all of this stuff. But I still think that ultimately you're catering for two things, right? You're a huge population, very young, and a very young population that's growing. And the mobile phone has given Africans today the ability to create value in a way that's never been given to them. There was no democracy of creating value before the mobile phone. The mobile phone has given everyone, whether the guy is a trader in the market or an entrepreneur creating, a blockchain, the mobile phone and the internet and technology has given you the democratize the ability to create value. And that's why I'm excited.
In some of the other podcasts that you've on, you're speaking about the convergence of VC and private equity. Why do you think that's going to happen, and why?
So first of all, I think the private equity industry. So I'm in Cape Town today because I was attending something called Super Returns, which historically has been a private equity conference. The last one was held in Cape Town was 3 years ago, just before COVID in 2019. And I remember talking to the organizers and saying, look, we need to have a venture capital piece, right? And they stuck on 2 hours at the end. But what happened during COVID is that there was a huge rush of money, both venture, angels, etc., into these technology companies. And you've all seen them. And there were some great exits and some not so great exits. But the returns that people saw were massive, right? So we have, I think, about half a dozen unicorns on the continent. And private equity, meanwhile, has struggled on the continent to provide the returns that it was promised. So I think someone said to me, and it needs to be checked, that average returns of private equity is about 7 to 8% on the continent. And the reason for underperformance of private equity in the continent is really down to macro. Because you can have a great business. Look, when I first went to Nigeria, the naira was trading at about 150 naira to the dollar. Today, depending on who you're asking and depending on which market you are, it's maybe 6 to 750 to maybe even 1,000. So if you think about a private equity business that's cash flow positive, making a profit, and it grows, it has to grow by 150, let's say 600 today. Over the last 10 years, growing 4 times you'd still be standing still, right? So to give a return to your private equity investors, you'd have to grow more than 4 times to just deal with the currency issue. And whereas venture, because of the speed and scale, and especially in the last 3 years where there's so much money coming into venture, the currency issue, while relevant, has not been as big a factor because you're growing at such a fast scale and valuation is so high. So what's happening on the continent is that all the private equity investors have said, well, we also need to fuel venture to allow them to come up, to allow private equity to come in. So there's a convergence between the two. So if you look at Helios is raising a private equity fund, DPI is raising a private equity fund, Verot was one of our clients, they're doing a private equity fund with Keppel, Verot Keppel. So now they're saying they're plugging both downstream and upstream. So you can actually build these venture companies using a venture capital arm or funds, and then flip them over into private equity when they become private equity investable. So they have, they're EBITDA positive, they have proper revenue, they have more well-known structure. So I think that's what's happening, and I'm seeing it today on the continent. And that's why we are where we are today.
You mentioned COVID earlier. How do you think COVID has impacted the private equity and venture capital markets in South Africa, or Africa in general, actually?
So the weird thing is that when I remember one of our companies was raising funding in January 2020, and COVID happened, and like we all thought, oh, this is going to be the end, right? No way could you raise money. But that's one of the things I think I'm always amazed by, the ingenuity and resilience of the human race, is that you always adapt, and we all adapted, right? So we all switched to Zoom. The old days of saying, well, I need to go and see a founder and shake his hands and stroke his hair is gone. I can do stuff on Zoom. So actually what happened was that it actually accelerated investment into venture businesses, especially venture businesses which were, again, tech-enabled or tech-driven, where you didn't need to go and touch someone. Yeah? So remember, we were all afraid of touching anyone because it was spreading. So you didn't want to give people money. So what do? You create a mobile money transfer system. So you didn't have to physically handle money. So we invested in a company in Indonesia that was doing aid, distributing aid. And in the old days, guy turns up in a helicopter with a bag of money and he comes down to the village and distributes money. Couldn't do that in COVID. So they created a system where, and these people don't have bank accounts, right? So they created a system where you can use your face, you register your face in a bank, they give you a PIN number, and then you can go into the shop and show your face to the merchant, to his phone, because you don't have a phone, put in a PIN number, and you can buy goods. So what COVID did, whether in Africa, in Asia, etc., was accelerate this tech and tech-enabled businesses to do stuff faster, cheaper, and without getting into physical contact. So if you look at it, I mean, the valuations went through the roof during COVID. And that wasn't what we expected, right? We all thought it was going to be the other way around. We all thought that, there would not be any investment because people want to come and see you physically. We all thought that it'll take longer to raise capital. In fact, it is easier and quicker to raise capital. People were giving you money on one Zoom call and a pitch deck.
What are some potential winners that you have identified at the moment?
In our portfolio?
In your portfolio, or even in some ones you've seen?
I think, well, let's look at it, maybe step back and say, well, winners in terms of spaces, right? So what space are the winners? I think things like, we've seen this whole payment thing go to the roof, and you're kind of seeing what the winners are. In front of Wave, the Pace Tags, MSF, MSF Africa. So that the payment space is kind of, you've already kind of seen the winners. I think healthcare is a really, you haven't really seen anyone really crack healthcare in a massive scale. So I think in the next 4 or 5 years, you'll see emerging some healthcare winners because it's a massive problem on the continent. And I think you can use technology to scale healthcare in a way that we've never seen before, right? So I think healthcare for sure, and education is the other one. So again, education, if you look at what happened in India in education, notwithstanding Baiju's problems today, but the ability to scale education to the masses using technology is transformational. And I think we're not seen, again, the winners yet, but there will be some massive companies on the continent created in education technology, education and healthcare. I think it's always difficult to say who's your favorite child. So I don't want to sort of, my founders ring me up and saying, hey, you didn't mention me. But having said that, I can see already, if I look at the portfolio, we kind of pre-seed to Series A investors, and there are about 5 companies that are raising Series A. So you're already seeing that those 5 will be ahead of the curve, right? One of them was a UK company that called Alto Vita that raised a $10 million Series A in an incredibly difficult market. 2 women founders changing corporate housing. They just announced last week. I think they raised money from the largest property VC called Fifth Wall. So it's kind of proof of the pudding, right? So you've actually seen a company go from, started 2 years ago or 3 years ago, raise money and get to a Series A, a good Series A with some marquee venture capital investors. And that's usually a signal. It's not always the only way. And different companies are different in terms of their growth trajectory, right? So for example, you'll see like in fintech, they grow very, very fast, right? Other sectors where it takes longer to build the infrastructure to grow, but then once you hit a certain inflection point, then you start growing quickly. But I think the thing that I would also say is that a lot of it is demography based, right? So Nigeria is a big market for us, 200 million people. Kenya, ditto. Egypt, we've got, I think, about 6 companies in Egypt. So there is that whole demography space that you need to, that we believe will drive growth and value.
There was a question I asked earlier, but I think it was missed. Was what percentage of your net worth should you start angel investing at? Because I mean, you can literally be an angel investor at any level, right?
Sure.
But if let's say you want to really make an impact in investing, where would you?
So I would turn it around the other way and say to you, in fact, everyone asks me, first of all, never invest money that you can't afford to lose. Okay, and remember that these are illiquid investments that you're going to be tied up for a long time. So when you put your money in, kiss it goodbye, right? So that's the first thing. And budget for everything else you need to do, right? So don't mortgage your house and put your money in angel investing. I think the rule of thumb people talk is, no more than 5 to 10% of your net worth should go into these kind of illiquid investments. Different people have different risk tolerances, and different people have different time horizons. Okay, so I would say if you're investing, I would say you're looking at a 5 to 10 year time horizon, right? For us, I mean, we like to think that we would want to get out. I think before we said we could get out in three to 4 years. I think the reality in today's market is probably more like 5 to 7 years. So understand your time horizon. Understand, don't bet your house, don't bet your children, don't bet your wife, right? And also I think understand that you are also learning, and I think that's the thing that I look back and say, well, I've actually learned a lot by being an investor. Learned about, good and made mistakes, learned from my mistakes, learned what works, what doesn't work, honed your thesis a little bit, learned that, I think Vishal and I have a very, very good complementary skills. He's an investment banker, I'm a lawyer. We have different ways of engaging with people. I think, but work as a team. I think the other thing is working as a team. I think it's having someone else with you or other people with you helps to help you both. You become a better investor because you get feedback, you can bounce ideas off each other, and you have support from each other, and you can start small. I mean, you don't have to write big checks, right? I mean, I'll give you a little funny quote that I always say. So one of the early books I read about being an angel is a book by Jason Calacanis. It's called Angel, I think it's called. Whatever you think about Jason, the book is quite entertaining. And he made a lot of money from Uber, and he likes boasting a lot. So that's kind of what he says. How he's like, there's one phrase where he kind of says, well, basically, don't fuck with Jason, right? So if you don't give him a deal, he gets whatever. Anyway, but the point is, he said, look, you could take, if you had $200,000, you could go and do an MBA, or you can invest in 20 companies. And you'd probably learn more by investing in 20 companies than doing an MBA. So there is an element of tuition that you got to look at it as not just investment. You got to look at it as education and tuition. So in the same way as you would go and get a degree, and you're paying 50, 100, 200,000 to get a degree, well, you can say, okay, I'm going to pay 50, 100,000 to invest and learn, and you know what? I might make a return as well. So it kind of depends on how you look at investment.
I know Rian's been dying to close off the podcast with a question for you.
Yeah, I've got two. Just before I ask that question, I wanted to ask if you could give advice for a young person. I know we spoke earlier about it's all about timing and networking. Like, what advice would you give the younger founders, like, not to do with their spare time, but to put themselves out there in networking and just networking and putting himself out there to meet the type of people that put your life in a different direction. For example, the guy in the elevator is, if you didn't take that time to go have breakfast with him, just more life advice to the younger guys.
So I think, look, I'm an incredibly sociable person. I just like talking to people, right? So I'll talk to anyone from the waiter to the bellboy to the president. So I just like talking to people because I find it fascinating how different people think, but that's just me. That's not everyone, right? And as a founder, not all founders are extroverts. Not all founders are sociable. Not all founders, and I think the first thing to do is recognize what your qualities are. And if you're not that person, don't try and be that person. Find someone else to go and be that person, right? Get your co-founder, or get someone else. And we were talking about this yesterday. Some founders are amazing at fundraising. Some founders are terrible at fundraising, right? So if you know that you're terrible at fundraising, don't try and be a fundraiser. Go get someone else, a co-founder, whatever, a placement agent, or whatever. But understanding your limitations and your capabilities is the most important thing I think you need to understand. I think networking is so important part of this game, because this game is about telling stories and getting people's conviction and making people believe that when they give you money, that you're actually going to give them a return. That's the most important thing, right? And selling the product. Are you really solving a problem? I think one of the things that I always say is that, especially on the continent, we don't want to invest in, and we don't need a lot of things which are not solving real problems. So if you're solving a real problem and you're telling a real story, you're doing half the job already, but you still need to be out there. And there are so many things you can do, right? I mean, look, you can I know some people who are great on Twitter. They're always on Twitter. But then after a while, you think, is this guy doing any work? Is he always on Twitter? So there's a balance, right? But I think events where you're out there, you're talking to people, you're using peer networks, so we have a bunch of founders who are part of a fintech collective in London. So they meet every 3 months and they engage with other founders. And networking is not just about, investors, it's about everybody, right? So getting support from your peer group is also very important. So if you are a bunch of fintech founders, having a network of fintech founders and helping each other. And actually one of the things that I think I have found in this space is that people are very open to helping you. So they have no skin in the game. If you say, I need some help, and you ask them in a nice way, and you're not an asshole, they'll help you.
And then just finishing off this episode, I recognize the tie and the colorful tie. Has that become a trademark for you?
Yeah, I think, look, I've always liked wearing colorful things, even like very, very young, right? But I think I've got more eccentric as I grow older. And when you start a career as well, right? So first of all, I work in a very conservative industry, legal profession, right? So, as soon as you start wearing something a bit different, people are like, what are you doing? So if you look at my the early stages of my career, I definitely wore more colorful things, but I was much more conservative. As you grow older and you think, I don't really care what people think, you should wear, first of all, I should say, you should wear what you like. And I like what I wear. So I wear it because, but then it's become, quite funnily, it's become a kind of a trademark thing, right? I started wearing bow ties probably 10 years ago because my son, who was then 14, started wearing bow ties. I said, that's really cool, right? and he taught me, actually. My son, 14-year-old son, taught me to wear a bow tie. And like, he'd give me lessons. And that was kind of cool. And the fun thing about bow ties is that not many people wear bow ties, right? So, and I like them because they're small, they're easy to carry around, they're funky colors. And it just gives me a bit of joy and happiness to wake up in the morning and wear something that's colorful and interesting. And then, yeah, I guess it's become part of your trademark. And then, what happens when you become part of your trademark is then you sort of double down on it, right? you start saying, oh, wow, I really like this. Let's wear more of it or get more of it. Or, I'm always on the lookout for something new and interesting. I like cufflinks. So, for example, these cufflinks are very unique. They've got like a skull, but it looks like a stamp of Queen Elizabeth. So it's things like that. And I think the thing about blokes as well, right? So it's very easy as a bloke to just wake up in the morning and just put on whatever and don't care, right? Whereas, not we stereotype, but women are much more careful about the way they look and the way they present themselves, what they wear. And that it's fine, that difference, but I think making an effort makes you feel better, makes me feel better, right? If I wake up in the morning and make a bit of an effort about how I look and what I wear, I have a spring in my step.
It's funny how they say like the clothes that you wear and getting dressed in the morning makes you more productive during the day, especially during COVID, waking up and then working in your pajamas. It doesn't make you productive.
Yeah, exactly.
But yeah, I want to say thank you so much, Raj.
No, I've really enjoyed the chat, guys, and thank you very much for hosting me. It's been a fun journey, for me and Vishal on the continent. And we continue to be excited about opportunities and love seeing young guys like you, and that's the other thing I think. Actually, the one thing that I think that's the most exciting, whether it's you guys, Aaron, a bunch of other founders, we just love the fact that you young people are actually out there doing something, making a difference, and hopefully making yourselves wealthier, but making everyone else wealthier as well.
That's the goal. That is the goal. Thank you so much, Raj.
Thank you so much.